All right. Weekend is over. Back to work this week. Let's make some money these final couple days of the month of October. And man, oh man, these markets have been wild the past couple sessions. Big move up, big move down, big move back up. Kind of scary at first, right? But I'll tell you, anytime markets behave like this, big moves back and forth, there are a couple easy, reliable trades we look for the following day. In fact, I have 4 trades I'm watching for tomorrow. We're going to cover all the entries, the setups, the triggers, the best targets. By the time we're done tonight, you'll have an easy roadmap to make some money on Tuesday morning as well. So charts are all ready to go. No time to waste. Enough for the intro. Let's go make some money on Tuesday and finish up what's been a fantastic month of October. Charts look fantastic here tonight. Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have 3 very important clues here. Simple but very important clues on these charts that are telling us where I think the winning trades are waiting for us tomorrow. One of those big clues is right here on the 60-minute, these hourly time frames. We have lower highs, we have higher lows. It looks we got a range brewing here on the S&P and SPY. That is one very big clue if you're trading E-mini and the SPY. Speaking of ranges too, look at this beautiful range we have brewing here on the Nasdaq. Markets have been rotating back and forth. And I'll tell you right now, it does smell like a new range is forming up here. But if these buyers, if they don't get their act together up here, this thing may tumble all the way back down and take out the low of that trading range. So both the S&P and the Nasdaq, the SPY, triple Qs are all range bound. That makes sense too because we've got some big news coming tomorrow and later on this week. That's one of 3 clues I have in front of me right now. But I'll tell you right now, I have 2 more important clues on some faster time frames. Some tick charts. We'll grab those in a moment and help time the best entries for tomorrow. First things first though, what's in the schedule for tomorrow? There's 2 important news blocks on my mind for tomorrow. One is that JOLTS report and consumer confidence number at 10 o'clock Eastern time. Anytime we have Red Star News at 10 a.m. Eastern time, you want to be paying attention. You know that JOLTS report is on everyone's mind ahead of that big non-farm payroll number coming later on in the week. So 10 o'clock tomorrow is certainly on my mind. And don't forget, there is a sense of urgency tomorrow morning because tomorrow night, the first of 3 big blocks of the Mag 75 of the Magnificent 7 tech stocks reporting after the close this week. Tomorrow night after the close, AMD and most importantly, Alphabet, right? That $2.5 trillion market cap. Why is it important for tomorrow? What does that tell us? It tells us that be careful in the afternoon. Tomorrow afternoon and pretty much the afternoons all week this week. So really tomorrow is when I get in trades as early as we possibly can. And again, keep the eyes on that 10 o'clock news tomorrow morning. And we'll come back tomorrow night in the front row seat for the reaction to that earnings report tomorrow evening after the close. But let's get back to our charts though, because it's good to know when the news is tomorrow, but we don't trade news. We trade the patterns we see on the charts. I mentioned earlier, we have 3 important clues right now. One clue here, lower highs, higher lows, flattening moving average. It looks like a range going on right now. Now, anytime we see ranges like this, we know the edges are where the money is usually made. So buying below the edge lows, selling above the edge highs, right? Bull traps off the highs, bear traps off the lows. These ranges act like magnets right in the middle. One very big clue we have here on this hourly chart. But you know what though? Hourly charts are great for the big picture, but they're not going to help us time the best entry for tomorrow. Let's grab some tick charts right now and finish up this process, get a game plan for tomorrow. That is a 7,000 tick chart, all the time frames there in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. As you can see, it's pretty much the only indicator I use to find lots of winning trades each week. Speaking about ranges on that hourly chart, there's a big range right in the middle. Now, why are ranges so important? Well, ranges, 2 things. 1, they act like magnets. And 2, they love to rotate back and forth. Range rotation is really the key to making money in really any market you want to apply it to. Buying off the lows, selling, of course, here off of the highs. One very big clue here on the tick charts. The second clue here is that big gap that we saw here. We had that big run up, big run down, big gap up. Most of us know that gaps almost always get filled, and so we have to know that gap down there is kind of like a psychological magnet for this market. So we're probably going to get this thing rolling lower to fill that gap and at some point back up into that range up overhead. So put all these clues together. Big range forming on the S&P right now, small range here in the middle, and of course that gap just begging to be filled down below. Knowing all of this, there are 4 trades on my radar for tomorrow. I have a bonus 5th trade we'll talk about on the Nasdaq as well here a bit later on in this video. One of my favorite trades, because we are still overall bullish on the higher time frame. I would love to buy a bear trap down here, right? Go back up into that range. The only challenge though is that this will be a lot of bearish momentum as we're going lower. So in this situation, my first out of 4 trades I'm watching for tomorrow is what I call a crown reversal. Crown reversals are my favorite trade whenever I want to be a buyer, like in this example, but I have a lot of bearish momentum running lower. And crown reversals are very, very simple. This is a great place to be a buyer, but a horrible place to be a seller. So rather than trying to pick the bottom on this, because I don't have a crystal ball, I can't pick that bottom. What I'll do is I'll wait for sellers to come in, chase it lower, try once, go higher, and try twice. Now watch how this pattern sets up. It's a higher high in price. I want to get just below that low in between. And then as always, I want to see a strong, in this case, strong green candle closing above that 21 EMA. That is what I call a crown reversal pattern running higher. Now, oftentimes these crown reversal patterns, they will back to back. So for example, we'll go higher here. We'll get some separation away from that moving average, and we can look for what I call a bear trap pattern. It's a separation off the moving average, it's a higher high in price, and trap right below that low. Remember, ranges want to rotate. We then project now above that range, right? Mark the amount of below, mark above now. That becomes our targets on the side of that range. Target 1, top of the range, of course, target 2 there, letting that trade run as it wants to rotate. The first of 4 trades I'm watching for tomorrow is called a crown reversal. It's basically a bear trap off of that low. Trap those bears in, squeeze those stops, and then as always, if you want to make more money, add to your winning trades, look for that classic bear trap pattern like I teach in the free video course. There's 1 of 4 trades I'm watching for tomorrow. Now, with all of that momentum running lower, I may get that crown reversal pattern going lower. We may get this to run up. Oftentimes, though, with all of that bear momentum, I'll get that first target. It'll be a winning trade. I'll move that stop up to my point of entry. But again, with all that momentum running lower, oftentimes they'll hold the underbelly of that range. Ranges love to break out, pull back, and make another run going lower here. This is not a breakout. It's not a reversal for the bears. Usually in an overall bull market we have on the hourly chart and that big range forming on the hourly chart, this is usually a horrible spot to be a seller. You're selling right into those lows. With that range above us, it's a great place for a bear trap. Now, when I say bear trap, think about this sequence here. It'll be a failure pattern first. Bears try once, bears try twice. Why twice? Again, because then once they try twice now, I'm not trying to pick a bottom on this. What I can do is I can use their stop loss, right? If you're stopped out as a short seller, the only way out is to buy your way out, right? So an easy way to make money in range markets like these is to wait for a breakout. On the initial breakout, I love to use these crown reversal patterns. But on the retest of that breakout, I can be a lot more aggressive on this because anybody who sold short up here, they become buyers down here. Now, this will be a slightly more aggressive entry. On this one, it'd be a failure pattern. 1 try, 2 try, and I'm buying right into those stop loss. A simple failure pattern like I teach in the free video course. And then again, you want to add to that winner, shallow pullback to the moving average, higher high in price, and that leaves us now with a bear trap combination. Again, remember, the markets want to rotate, ranges want to rotate, so we can get either one, either that failure pattern or that bear trap pattern. Targets go off, other side of that range, measure the amount below, measure the amount above, and that's where we're going to leave that runner overhead here. Now, I'll bet if we're lucky tomorrow, we can get up and sell this all the way back down again because ranges act like magnets. So we've covered 2 out of my 4 favorite trades here so far. Before I talk about trade 3 and trade 4, let's slow down for a second because I know most of you guys and gals watching right now, you know these patterns. You're making money with traps and, of course, failure patterns. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy you want to learn. So I teach all of these entry patterns. I have the whole roadmap covered in a lot more detail. I have a ton of examples of crown reversals, failures, and bear traps all covered in my free video class. What I'll do is I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free video course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, make a lot more money in trading. Guys, the markets are way too good not to be making consistent profits right now. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples I include in that free video series. And again, perfect for anyone who's serious about making money in these markets. And keep in mind too, I'm going to put all the important links we talked about tonight in the description of the YouTube video. Start first with the free video course. Everyone loves the free video series. So start there, learn the roadmap, start making money on your own. And don't forget too, we trade together every morning in our trade room, 8 o'clock Eastern time. I'll put trade room membership links down there for you. And keep in mind, I'm on Twitter or X throughout the day, posting charts and videos and mindset stuff throughout the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more are linked in the description of that YouTube video. So range above us here, I talked about that crown reversal pattern, basically a bear trap pattern going higher. I talked about if it rolls back over, it's that failure pattern, a bit more aggressive pattern going higher. That was 2 out of the 4 trades I like for tomorrow. And remember that range, right? Ranges love to rotate back and forth here. So same thing similarly applies here overhead. If I go higher here, I do not want to buy way up here. I know we're bullish overall. I get that. We're bullish overall right now, but I don't want to be buying above these key levels of resistance. So even though we're bullish overall here, I would love to trap in some of those buyers up here. Now, got to be more careful on the sell side because we're still a bullish overall market. So same basic idea here, right? Trap the buyers in. Let them try once, go lower. Let them try twice, especially in an overall bull market. Lower low in price. I'm going to be right above that high. Again, we call these crown reversals in our trade room. It's basically a bull trap as a reversal pattern going back down again. Notice how, again, lower low in price, we're right above that high, strong red candle closing firmly below the 21 EMA. That is your bull trap or a crown reversal. Where's the market want to go? It wants to rotate back to the other side of that range. As it makes that drop, how do you add more? You always add more with that simple, in this case, it's a trap, it's a bull trap pattern, right? It's that it's that separation of the moving average, it's that lower low in price. I'll tell you right now, that could be an easy way to make more money going lower here. Again, crown reversal pattern 1, as it rolls over, watch that bull trap entry to add more to your winners as it rotates back and forth again. Another variation of this I do want to talk about, in the 4th and final trade here on the S&P. Then we'll grab the Nasdaq and toss in that 5th bonus trade I mentioned a few moments ago. We may run up and we may get whacked right back down again. I would love to go up here trap some of these buyers in and run back down again, right? Trap them in, use their stops to run back down again. But you know what? There might be so many bears up there. We may not get that crumb reversal pattern off the high. If we go up and we get whacked back down again, watch for this V-top reversal pattern. If it V-tops off the high, it almost always begins to grind down as it separates away from that 21 EMA. The minute you see that grinding move, it separates, starts grinding down, that is your giveaway now of how to find the right entry. Mark a trend line off the lows here, bring that trend line up, find a channel off the high, and as you guys know, we're gonna look left here, find one of these prior swings, get it lined up right around the top of that channel, and the goal here is I want that first test off the high of that channel. Now, this could be a bull trap. Look, I'm showing you here. Ideally, you want a bull trap off the high. A lot of times what happens, though, is we'll get up. The buyers will pull back to that 21 EMA. They'll try to take it higher. But again, range below us act as a magnet. We trap in those buyers. There's that failure into pullback combination. So it could be really any of the entry patterns you guys are learning inside the free video course. Bull trap, buyer failure, pullback combination. Again, if this is a brand new language for you, grab that free video course linked up in the description of the YouTube video. This will make a lot more sense, a lot more examples of these pattern setups included in that free video course. So that kind of V-top reversal. Same thing applies down here too, right? We go lower, we V-bottom off that low. Whenever V-bottoms off any high or low, it's all about finding that new channel. So we draw that trend line off those highs, bring it off that low, right? Look left, find some prior swings, find the prior swing that lines up at the low of that channel, and that's the one that you want right there going higher. Ranges act like magnets. Ranges love to rotate. Don't try picking tops and bottoms. Look for bull traps above the high, bear traps below that low. 4 of my favorite trades here on the radar for the S&P and the SPY. Now, I mentioned earlier, I have one more bonus trade right now setting up here on the Nasdaq. Before we talk Nasdaq though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading friends. That small action takes barely any time for you, but makes a big, big impact on my channel because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days, and I appreciate you guys spending a few important valuable moments with me every evening on these YouTube videos. So thank you so much for the likes and the shares, all the support. Now, let's get back and talk about the Nasdaq. Nasdaq, like the S&P, is bullish into a trading range right now, and it does look like they're fleshing out a new range up here on that Nasdaq. But like I mentioned earlier, if these buyers aren't careful here, we know that ranges love to rotate back and forth. If they can't get their act together, this could easily rotate all the way back down and take a low of the expanding triangle, or that megaphone as we call it in the free view course. Now, this is a very, very big clue here on the Nasdaq. Let's drill down to our tick charts here now. Tick charts, of course, are better for entry timing because tick charts are based on volume. That is a 4,000 tick chart. You'll see linked up there, upper left-hand corner, same 21 EMA here. Boy, look at this big clue right now on these tick charts. You want to write this down. One of the most important clues I can teach you in tonight's video. Anytime we see big move up, big move down, big move up, big move down, anytime we see big moves back and forth like this, it almost always means a range is coming. So I don't exactly know where that range is right now, but that's why I said earlier, it does look like we're starting to flesh out some range up here. So again, a lot like the S&P right now, kind of bullish there into a trading range. That's one really, I think one of the biggest clues here on this. Another big clue here on the Nasdaq. If you watched last week's videos, we finished up the week last week with a slingshot breakout, right? That range, that slingshot breakout. If you watch the end of the week's videos last week in the YouTube channel, we talked about that slingshot breakout Thursday evening last week. Well, one thing we know about ranges is that once a range breaks out, it almost always comes back for a breakout pullback. Breakout pullbacks, it's not an if, it's a when. It's one of the most consistent things I can teach you about technical analysis and day trading. When a range breaks out, think about what was resistance and use that now as a key area of support down below. So put all these clues together here. It's easy to see why I love the idea of buying a crown reversal pattern down here. The challenge again though is, even though we're overall bullish, we definitely have, with that lower high, we definitely have a lot of bearish momentum. So don't make that rookie mistake trying to pick tops and bottoms, trap these bears in, use that crown reversal pattern. It's a higher high in price. Why higher high? Because that tells me now the sellers want to sell high. So let them try once, higher high, let them try twice, get right below that low, that nice strong green candle closing firmly above that 21 EMA. Bam, that's always one of my favorite trades here, trying to pick those bottoms on those range breakouts. And again, don't forget, right? We may go down, we may get that bear trap, crown reversal, we pop up, it may roll over, take out that low, we might get lucky and get another bite at that apple. Now remember, I wouldn't argue about a crown reversal down here. I wouldn't complain about a crown reversal, but on these double bottom retests, I can be a lot more aggressive, right? Because anybody who's selling here, they become buyers down at that low. This is a horrible spot to be a seller. So once those bears get trapped in short, I can squeeze their stops for that run going back up again. And remember, whether or not it's a crown reversal pattern or a failure pattern, like I'm showing you right here, I always try to add to my winners by looking for that separation off the moving average, a higher high in price, and get right below that low. This is a classic trap setup like I teach inside the free video course, that double bottom retest. Now the same thing goes overhead here, right? As we run higher, we're overall bullish. Now remember, one more thing I've got to mention on the S&P. When I'm trying to sell off the high like this, I always go, again, we're overall bullish, right? Not a bear market overall right now. When I try to sell off the high like this, again, I want to trap the buyers in, but I always go with a smaller position size. So a half size position, a quarter size position, right? So buyers once, buyers twice. And again, anytime I go against the directional bias, on the hourly chart I mentioned earlier, I want to go smaller size, right? Say my full size trades for the ones going with the overall direction. So same basic idea here with that bull trap, right? Basically that crown reversal pattern, we call it in the video course. But again, if I'm trading 8 contracts, normally it's a 4 contract trade, maybe a 2 contract trade, right? Go smaller size when you go against that trend here. One thing too, I mentioned that 5th kind of bonus trade here on the Nasdaq here. We'll talk about that here in a moment. As we go higher, think about that V-top reversal. Same stuff we talked about earlier on the S&P, right? If we don't get that bull trap entry off the high like I'd like to, look right, go out and find that new trend line off that low, up around those highs, look left, find some prior swings. And again, don't miss the first test off the high of that channel, right? First test is always the best test. Notice how that's the first time it pulls back to the high of that channel. It could be a bull trap, like I'm showing you here, a buyer failure, a pullback combo, like I mentioned earlier there on the S&P. So a lot of the same stuff here between the Nasdaq and the E-mini, which is pretty common overall between these two markets. One big difference though between the S&P and Nasdaq is the Nasdaq has the potential for that big run all the way back down again. The S&P doesn't have that much potential for that. So if we see, for example, let's say we make a big, strong run going lower. If the market really dumps and runs lower, again, we're not picking the bottom on that, right? So that won't run us over as buyers. But if this thing makes a really, really big move running lower, whenever I have a big move in one direction like that, I always look for a two-legged pullback. Now, two-legged pullback, think about a measured move, right? One leg, two leg. I don't want to sell low down here, right? I don't want to sell low. If this thing really rolls over, what'll happen is it's going to want to pull back and retest that low again, right? If it really runs lower, it'll want to pull back, usually a two-legged pullback, 1, 2, think about a measured move. That will give us the general area for it. And one of my favorite trades in these scenarios is if we do get that big run lower, I'll find that two-legged pullback, try to use what was support becomes resistance, right? So to use the underbelly of that range as resistance. We're not going to try picking a top on this. What I'll do is I'll use one of those 1, 2 failure patterns to sell back down to retest that low. Now remember, we're an overall bull market. This might be a lot of bear momentum, which makes it easy to short that pullback right now. But once I retest the low, I do not want to sell down here. In fact, if I'm getting short on a breakout pullback, basically, right, a 2-try failure pattern like that, my profit targets are right back to retest the low. I may sell here, but I'm buying my way out down here. So sellers enter here, buyers enter down here. This is where one of those double bottom retests be very, very lucrative for us tomorrow morning. If we make that run back to that low here, now flip it around now. Now trap the bears in once, twice, and squeeze those stops with that 2-try failure. Remember, at this point now, the market wants to go where? It wants to take out the high of that move right there. Before you get there, you got one trade on your radar here. It will always be that bear trap, that shallow pullback, that higher high in price, and that trap right below that low. So one small difference here on the Nasdaq, if it does run and puke lower, right? Not rotation back and forth. If it rotates back and forth, we're still inside that trading range. But it really runs and makes that big run going lower towards the low of that big range on the hourly chart. Think about that two-legged pullback, a measured move. And again, don't pick that top out there. Trap those bulls in. Think 2-try failure pattern. Run back to retest that low, and that double bottom overall bull market in the 60-minute time frame. Nothing better than a double bottom short squeeze, right? Trap those bears in, squeeze those stops, add more on the runner, and leave those runners as it runs back up into these ranges. All right, guys, that's the plan now for tomorrow. Speaking of tomorrow, don't forget tomorrow morning, 8 o'clock Eastern time, guys, the best way to make money in these markets right now is to learn and trade along every morning in our trade room. I'll put all the important links you guys need to learn more, hopefully earn a lot more in this video description here tonight. So start first, as always, with the free video class, learn the roadmap, start making money on your own. Don't forget, any trouble getting access to our free video classes, you can always use live chat or call the office. We're here to help out with tech support stuff every step of the process, guys. All right, guys, hope you learned a bunch in tonight's video. Hope you use this knowledge to make a bunch, earn a bunch tomorrow as well. And hopefully I'll see you trading with me sometime soon as a member of the trade room at 8 o'clock Eastern time. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.